Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to the bigger picture of me, Ryan Huang. And we are looking at the Singapore economy today. We've got some numbers out for 2024 from the MTI's economic survey. And we have the latest growth numbers for Singapore expanding at a faster pace of 4.4% in 2024 compared to an earlier estimate of 4%. And this comes as the economy grew 5% year on year in the fourth quarter, higher than the initial estimate of 4.3%. But the MTI kept unchanged its slower growth forecast for this year at the 1 to 3% range, flagging downside risk from a further escalation of geopolitical conflicts and higher uncertainty over U.S. trade policies. So let's check in now with Barnabas Gan. He is the acting group chief economist and head of market research for RHB Bank. Good morning, Barnabas. How are you doing today? Happy Valentine's Day.
Good morning. Good morning. Thank you for the wishes.
All right, let's take a look at the latest numbers. We've got full year growth for 2024 at 4.4%. How much does that align with your expectations?
Yeah, so it's a beautiful morning, if I may add today, because the numbers have been very strong. If you just check back with the previous numbers, it has been largely above expectations. In fact, we were above expectations prior to the print already. We were looking at 4.2% for the full year, and it came in at 4.4%. I think what's important to note really is that even though our fourth quarter GDP forecast was spot on at 5% in the previous quarter, but what we have observed was that the numbers were actually revised higher for the first three quarters of the year. And that essentially has actually brought the full year to 4.4%. So it's a very good trend and a very good end to 2024, if I may add.
Okay, so a couple of things to watch out for on the horizon before we unpack some of these growth drivers. And the one that stands out is the MTI saying there's uncertainties in the economy, global economy, and risks are tilted to the downside. And of course, we've been hearing a lot from Donald Trump with his tariff policies. The latest, of course, is his plan to have reciprocal tariffs on all trade partners. So it's going to be something to worry about. How much does that factor into your growth forecast for this year?
Yeah, so there's a lot of things to watch out for this year. Unfortunately, I think the only certain thing that we have, that we know really, is that there's more uncertainty to come. So what we do see really is that there has been a period of de-risking at this juncture. We have seen some shortfall in equity flows from the global perspective, and in response, investors have been flocking into safe haven, really noting that gold is at record high. Vis-a-vis the fact that we are seeing increased inflows in the bonds as well. And that basically suggests to us that investors globally has been very much prudently cautious for that matter, at this current juncture, really in response to the increased uncertainties at hand. So for Singapore, I think that it's also good to probably stay a little bit cautious, not because of its domestic growth drivers. We are quite resilient, if I may add. But given that we are a small player and a global player for that matter, we have to be cognizant about global market forces that may be, driving growth for this year. So I think essentially 1 to 3% seems to be very realistic. In fact, we are calling for 3% at the top bound of 2025 GDP forecast, and this is very much based on the fact that we think, that a lot of the concerns that we are seeing right now probably transitory. We are still looking out for what Trump may do, but in the sense that he has put back tariffs threats against Canada and Mexico. The threats on tariffs for aluminium and steel, it's going to be effective in March, but who knows if that's going to be effective then. So I think probably I will sit tight in my seat, wait for more clarity. But at this juncture, we do see that numbers are very strong, and that basically means that momentum will likely be sustained, in absence of tariff shocks.
Yeah, Barnabas, let's talk about cost pressures and inflation when it comes to some of these potential scenarios. We could be seeing trade frictions, escalating disputes, and this could all lead to higher production costs. So what level of risk is this scenario that we're looking at in terms of some of these cost pressures going up?
Yeah, so I think there are two ways to look at it. One is basically if we have to account for the fact that if ASEAN as a region is being labeled as a China supply route by the US. And if that comes to pass, that basically means that the US identifies, ASEAN as a potential region for China to bypass tariff threats or tariff measures, and rebatch China exports back to the US. And if that happens, then probably we might be seeing some form of increased inflation when Trump starts to tariff against various parts of ASEAN, and that may lead to higher supply chain constraints within the region itself. That's not seen at the moment, if I may add. But what we do look at right now is that if there is going to be an intensification of US and China trade tensions, and if ASEAN still remains to fly under the radar in terms of these tariff measures, then that could mean that inflation could still be contained within ASEAN. And why is that so? It's because China would need to have to reroute its supplies away from the US, noting that US demand for Chinese goods will decline, given the tariffs, and that basically means probably a glut of supplies of probably raw to semi to even final goods supplies into ASEAN, and that could mean that inflation and price pressures may stay contained in 2025.
Yeah, Barnabas, we saw to some degree the China Plus One approach from some companies benefiting ASEAN, and looking at some of the bright spots in Singapore's economy, what do you see is going to be bringing further momentum for 2025 when it comes to growth? I'm thinking the AI boom to some degree could help with the electronic sector.
Mm-hmm. Yeah, so there's a lot of things to be excited about for this year, in fact. I think first and foremost, we have been seeing anecdotal evidence that companies, global companies, in fact, have been has been eyeing very closely, especially into Singapore, given the fact that we have actually signed the Johor Singapore, special economic zone. That basically placed us on the map, almost a greater red dot, so to speak, in terms of what the global players are seeing Singapore, in conjunction with Johor. And that basically essentially means that there will likely be increased interest from the semiconductors, from the advanced manufacturing, artificial intelligence for that matter, and of course, with the ongoing modernization as well as automation, trends that we are seeing, around the world, noting, that semiconductors, manufacturing, as well as AI manufacturing has been all the key focal points, and growth engines, probably in the last 5 years or so, would mean that Singapore will still be very well positioned, to take advantage of this trend.
All right, 2024's growth at 4.4%. The forecast for this year from MTI is 1 to 3%. Where are you on this range, Barnabas, for this year?
Yeah, so I am pretty optimistic this year. I think that the market fears over potential tariffs by the US could be overdone. Of course, with Trump in the picture, probably we do not know what tomorrow is to come, but we are slightly more optimistic at this juncture. We are actually looking at the 3% growth, which is at the top bound of the 3%.
Well, definitely quite optimistic as we wrap up Friday, and helping us to break down the latest economic survey of Singapore for 2024 has been Barnabas Gan. He's the acting group chief economist and head of market research for RHB Bank. Barnabas, thanks for your time and have a great weekend in advance.
Thank you so much.
Right, catch up with you again soon. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.